What's up? What's up? What's up? Good morning, everybody. How are you doing on this fine day? Sorry, we're starting a minute late. I was sitting here at my desk watching some of the edits that my team sent over for some videos dropping this week, and just got lost in the sauce there. But good morning. Hope everybody's having a great morning. Vivian, yes, I love it. Let's get it. Andrea, Alicia, Paul, Benjamin. Good morning, my brother. Good morning. My sister's in here. Good morning, everybody. I'm excited to dive in and have a great day, right? I'm excited to get after it. It's been a great week thus far. Amazon came up as a beautiful home run yesterday. There will be a video about that. We've had NEM come through 2 days ago. We had QQQ puts come through, XLE puts come through. So we've been having a number of individuals come through for us this week in a big way, even though the market has been, kind of choppy. Again, like I said yesterday, we are net bearish given where we are technicals wise, and that definitely plays a role into us coming into the Fed day today. So Fed day today, super excited for that. We'll see kind of what movement we end up getting. We want to remain patient, right? Execute, not get greedy, right? And take good profits when they come to us. And ultimately remember why we do what we do, right? We wake up every day in order to have an impact on those that we love. And maybe even if we're lucky enough, have an impact on the world. We got our work done, early yesterday, brought in big profits, was able to go and attend actually a high school friend's funeral. And he was a firefighter, awesome guy. This dude had 3 rooms packed out with people at his funeral. And he was probably my age, so we're at 27, 28, 3 rooms full of people. That is what you do all this for, right? At the end of it, you want to say, and he was definitely taken too soon, and it speaks to, the type of person that he was, just an amazing guy. And unfortunately, just car accident, right? Passed away in a car accident. But that's what you do this for each and every day, right? It's not to get paper, which is worthless, right? To accumulate fiat currency or even to feel good about yourself. It's really just to have an impact, right? To have an impact on people, touch people in whatever way means something to you, right? And keep it pushing. And that's really, the perspective and something that I want to, help ground me for the rest of my life, but also going into today. I feel like facing mortality, all that, it puts things in perspective, but you just see what real impact looks like, right? And at the end of the day, even if you do make a ton of money, in the market, and then you go to Vegas and you blow it on, drugs and strippers, at the end of the day, like, are you really doing anything? No, right? Is that going to make people miss you when you're gone? No, right? Is that going to have a lasting impact on the world? Absolutely not. So I just encourage everybody to continue to look at things with the big picture, continue to remain grateful, but also to just, recognize like what the ultimate goal is. And that's impact, that's touching your loved ones and even ones that you don't really know in a meaningful way, so that when it is your time to go, right, a lot of people are like, wow, that person made an impact. And you can have 3 rooms, packed out full of people that are all, kind of saluting you on your way out. So don't mean to start anything on a somber note, but that was just kind of some thoughts that I was having yesterday while at the service, and then also this morning. So let's seize the day, right? Let's make it a great day. Let's make sure that we're doing everything that we can, within our control. Make sure that we're kicking butt today and we're doing all our loved ones proud, right? And, go about it in the best way we can. So throw a 2 in the chat if you're in agreement with that, and we can go ahead and dive into what we got going on today. But I just felt led to share that and just talk about how amazing that was, kind of being there and being able to witness that was pretty freaking awesome, right? And that's all you can really ask for as a human that's here, for a twinkle in time. Now, in terms of our top news here, house in order, housing affordability is becoming a problem in the U.S. and is transforming the market in ways that could be difficult for home buyers and home builders alike. Today's economic calendar saw housing starts plunge by 11.3% month over month in August to 1.283 million, marking the lowest level since June 2020. On a year-over-year basis, housing starts fell another 14.8% and well below the 1.435 million units expected by economists. So this is super, super important when we start talking about like what the outlook is overall for the rest of the year. As you guys know, I've been making my foray into the commercial real estate space and real estate space in general. And you learn a lot of things, right? Just kind of navigating through that space. Being connected and talking to different people and getting an idea of, people that deal with the banks. What are the banks doing, right? What are the banks moving like? And kind of what's the domino effect? And you're starting to see, right, housing affordability really become an issue. And overall, banks kind of turning off the faucet when it comes to things like construction loans, right? Banks aren't really lending out right now for construction loans. Why? Those construction loans are really what was getting these regional banks in trouble, right? Because you're having, all this construction and not enough buying. And, you get that Evergrande type of situation like what happened in China, and nobody wants that. So I just think it's important to recognize that based off of what I'm hearing and what I can say from what I'm hearing is that this isn't over yet. And the big fear here is that, the Fed is going to decrease rates at some point. Demand is going to go through the roof. Everyone is going to drive inflation right back up, and then we're going to get right back into the spot where we have to raise interest rates again. So that's really at this point what like a lot of the higher ups, right, are talking about and are concerned about, right? And when I say higher ups, I'm talking like people in the 9-figure range, right? This isn't like your average, oh, I'm a millionaire and I'm doing this, I'm doing that. No, this is like 9-figure range, like multi billionaires this is how they are kind of perceiving what's happening, and this is their game plan, right? So if we're lucky enough to glean some of that information from them, we need to make sure that we're factoring that in and also applying it to our outlook. So, this whole housing thing, I don't think it's over yet. And, we're still at a spot where a lot of people are expecting, some recession, right? Expecting some pullback, and also expecting things to maybe just not be as easy, right, as us raising rates for a bit and then us decreasing them over time, because people are so ready to dive into things, right, that unfortunately I could see, humans are just gluttonous, and I could see us just diving right back into it. As soon as rates get cut, it's just like bam, 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 bam. People just buying stuff up, and then they run it right back up again. And that, ends up setting us back, right? It's like an addict where you go, what is it, on detox, and then the first second that you get to be free from the detox facility, you go find some drugs. That's kind of like what the American consumer is like. It's like, stop buying, stop buying, stop buying. The second they get a chance to buy again, they're right back at it. So in terms of quotes, quote, high mortgage rates are clearly taking a toll on builder confidence and consumer demand, as a growing number of buyers are electing to defer a home purchase until long-term rates move lower. Robert Dietz, chief economist of the National Association of Home Builders, said earlier this week. The statement came after home builder sentiment dropped for the second consecutive month and fell below the key break-even measure of 50. So the latest data may not only spell trouble for current housing dynamics, but future supply as well. Many are sitting on mortgages taken out during the beginning of the COVID pandemic, when rates were at 3% or under, and are not in a rush to exit their current properties. At the same time, builders are concerned about constructing new houses that buyers may not be able to afford, which has pushed many of them to the sidelines. See those same dynamics that I was just talking about. Student loan repayments are also about to restart, which can be another big setback for millennials who are looking to break into the market. So a number of different dynamics right here. And, timing, right? Timing is everything. And timing where it's just making things even worse for the housing market. Now, what to watch, quote, as long as rates remain high, homeowners will be reluctant to sell. And that lack of homes for sale will keep prices high, because it means buyers are duking it out for a limited supply of houses, wrote Chen Zhao, lead of Redfin's economic research. In fact, the median U.S. home sale price advanced 3% year over year to $420,846 in August, marking the largest annual increase since October, when mortgage rates surpassed 7% for the first time in 2 decades. Home purchases are also getting scrapped at the highest rate in nearly a year, with nearly 60,000 home purchase agreements across the country canceled in August. Now, in terms of central banking news here, Fed decision, it's showtime for the Federal Open Market Committee, which will announce its latest policy decision at 2 p.m. Eastern Standard Time. Nearly all economists expect rates to remain unchanged, but we'll take a closer look at economic projections, which will offer a view of how high the central bank may go and for how long. This week's Wall Street Breakfast Survey is still open. So if you haven't taken the poll yet, check out blah, blah, blah. This is them just pumping the survey. Analysts are also weighing in on today's big event that'll feature a press conference from Fed Chair Jay Powell. Alan Longbond explores what to expect at the meeting and how to trade it, though Stratos Capital Partners feels the outcome will have a limited impact on markets. Now, in terms of tickers that are on the move here, so again, Fed decision, right? FOMC minutes. I want to make sure everybody has this ready to go, right? We've got FOMC minutes at 2 p.m. and Powell at 2:30. So make sure you are ready for both of those. Again, most often during Fed days, the initial move is the one you want to fade. So if we start off dropping, right? The initial move you want to fade is the drop, right? And then you actually want to position, make sure you're looking for support levels, then get in for the pop, because a lot of times we don't end up going with that initial move that first happens. So you can still make money off the initial move. Just understand that it's probably going to be a quick in and out. And then you want to be positioned for that contra move or that counter move that comes afterwards. So that's really what we're looking at as we go into today. There are oftentimes like a lot of solid looks headed into Fed minutes. The market wants to get you, sucked in and involved. What was that alert on? Okay. So the market wants to get you, sucked in and involved in positions and then holding them through Fed minutes, and then you getting scared and getting shaken out for a loss. And then, the market makers make money. So just beware of that, right? Be aware of that. A lot of times you want to go ahead and, if you can make a quick scalp or do a quick scalp at the beginning of the day on a Fed day, you'll probably be fine, right? But if you're like waiting and then you see moves happen and then you're like waiting for late morning to get in, you're probably going to get caught in chop and then having to hold through FOMC minutes. So, remain patient today. Understand that, right? All that backstory information that I just gave you is absolute gold, because navigating these days are very tough. And then just wait for what we get at 2 p.m. and then at 2:30 p.m. And we'll see what Powell has to say. But it is, going to be a high risk day. High risk, also possibly begets high reward. It doesn't mean that we get some crazy huge run up or run down, but the market is, net bearish at this point. So if we do get a run up, right, depending on where we open up, we do get a run up, right? It could be just to retrace levels that we've lost to make us bearish, and then we end up, turning right back around. So I'm excited for today. Excited to see what we have going on in the tank, and I'm going to keep it moving so that I could go even deeper via the Loom videos that I'll go over in the trading group. Now, in terms of IPO buzz, grocery delivery firm Instacart closed up 12.3% in its market debut, ending the day with a valuation of about $11.5 billion. Instacart's rally comes close on the heels of ARM's IPO, in which its shares jumped 25% in its first day of trading. The initial enthusiasm has since faded, with ARM declining in 3 consecutive sessions. Seeking Alpha analyst, the Asian investor, believes traders are overpaying for ARM's revenue potential, a concern shared by Wall Street analysts. Nonetheless, ARM's debut was followed by Instacart and marketing automation firm Klaviyo, boosting their respective IPO pricing ranges. Klaviyo has priced its IPO at $30 a share, at the top of its marketed range, in a similar fashion to Instacart, and will begin trading today. Now, in terms of consumer news, hiring blitz ahead of the holiday season. Amazon said it will hire 250,000 workers in full-time, part-time, and seasonal fulfillment center and transportation roles across the U.S. The e-commerce giant will also invest $1.3 billion this year toward pay hikes for customer fulfillment and transportation employees, representing a more than 50% increase over the last 5 years. U.S. retail sales are expected to be resilient this holiday season, despite macroeconomic headwinds, including inflation, resumption of student loan repayments, and higher gas prices. While growth is expected, Deloitte sees holiday sales slowing to 3.5% to 4.6% from last year's 7.6% growth. Now, in terms of today's markets, let's see here. In Asia, we're down 0.7% in Japan, Hong Kong down 0.6%, China down 0.5%, India down 1.2%. In London, we're up 0.8, Paris up 0.4, Frankfurt up 0.6, the Dow up 0.2, S&P up 0.2, NASDAQ up 0.2. That looks like that's still roughly the case. And then we've also got crude oil down 0.9%, gold flat, and then Bitcoin down 0.4%. So that's what we're looking like as we come into the day. Oil has been something that we've been shorting since last week, and it's done, great work for us. Yesterday, oil tried to go ahead and get the little pop overnight, but it was literally just right to hourly bear flag resistance, and we rejected that hard and sold down from there. So XLE paying up on the put side, pats on the back for that, snaps for that, right? Continuing to make this money even with the market being choppy. With today's economic calendar, petroleum inventories at 10:30. I don't really know if that's important. I don't really feel like it is. The big thing is, again, FOMC minutes at 2 p.m., right? Basically what happened during the meeting yesterday, and the announcement on interest rates. And then 2:30 p.m. is going to be the big show, right? Which is Powell. So that's going to be the big thing. Now, in terms of what else is happening, Disney slips after move to double parks investments to $60 billion. Uber could hike prices by 40% if EU gig rules are passed. That's going to be the nail in the coffin for Uber, man. Uber prices have been out of control lately. So, I mean, if they do that in the UK, right, in Europe, it's going to make Ubering very expensive. Intel, ticker INTC, unveils new AI chips, more products at innovation event. Will the DOJ move forward with Spirit, whose ticker is SAVE, JetBlue, trial? Consumer Retreat, Goldman Sachs in advanced talks to sell Green Sky. Philip Morris, ticker PM, evaluates selling stake in pharmaceuticals unit. Ford, ticker F, reaches tentative deal with Canadian Union to avoid strike. So they're reaching an agreement on the Canadian side. Ford is. It's a good sign for them. Pinterest, ticker PINS, Investor Day points to high teens revenue growth. WBD, which is Warner Brothers Discovery, to launch Max's live sports tier October 5th for baseball playoffs. I didn't know that HBO Max was getting live sports. Everybody's trying to get into that arena, though. We've talked about that before. And then an earnings watch, FedEx earnings on deck, and what to expect. So that's what we got going on today. Again, Fed day, party day, volatility day. We got a lot of stuff going on. I'm excited to see kind of what we end up getting from it. But, remember to remain patient. Remember to execute. Don't be greedy. If you get great profit, take that great profit. Set your alerts, keep your charts going, and let's continue with this great week. I'm happy to see that a number of people took advantage of Amazon yesterday, in the plays that we've been going through. So, let's just keep it up. That's all you can really ask for. Execute, follow the system, and money will come as a byproduct of that. Don't come to the market, trying to force anything. Wait for things to come to you. Execute, take profit when the time has come, and you'll build your account over time, right? Which is what we want to do. Build sustainably. And over time, so we can really, really multiply our cash and make sure our money isn't just picking up odd jobs, right? But it's got a salary, right? It's got a salaried position with nice benefits and all that good stuff. So everybody have a great rest of your day. Again, remember we've got free game dropping daily over on Instagram. So if you enjoy this, make sure you show love to the account, like, comment on things, right? So that I can continue to bring you this content. And without further ado, let's dive into it. Have a great rest of the day. I'll see you guys back here tomorrow for our next Premarket Prep session. Have a good one.